Imagine waking up one morning and realizing the global financial system has quietly changed. No collapse, no breaking news, just a silent shift underneath everything we use to move money. You wouldn't see it on TV, but suddenly, payments between countries start moving faster. Banks settle transactions in seconds instead of days. And digital money begins to talk to the traditional system fluently, as if they've always spoken the same language. This isn't a prediction. It's already starting to happen. In this video, you'll walk away with 3 things. First, 7 realistic scenarios that could play out over the next 12 to 18 months. Second, how to tell whether each one is actually happening or just talk. And third, a simple checklist you can use once a week to track the signals yourself. Let's start simple. This is not a video about guessing prices or calling tops and bottoms. This is about learning how to read the road signs of the market, the ones that reveal when the system is speeding up or slowing down. Because the rule is simple. If it's real, we call it real. If it's possible, we call it a scenario. And if there's no data, there's no claim. The foundation of this story is clear. The world wants faster payments. Messages between banks are being rewritten in a new digital format. Instant payment systems are expanding across borders. And the word liquidity, which simply means how easily money can move, is becoming the center of everything. Over the next year, these 2 forces, speed and liquidity, start to overlap. That overlap will decide how the next chapter of the financial system unfolds. So let's talk about the 7 scenarios that could shape it. The first scenario is the post-migration acceleration. Imagine all those system upgrades finally going live. Tests are finished, and real money begins to move through the new rails. If this happens, it's because the new message formats reduce errors and make transfers cleaner. If it doesn't, it's because internal systems aren't ready yet. You'll know it's real when you see words like go live, production, or migration completed in official updates. Those aren't buzzwords. They mean the system just turned on. The second scenario is Europe becoming a bridge. Europe's instant payment system could start linking directly with others, the UK, Asia, or even Africa, creating the first truly connected network. If it works, it's because shared standards and strong regulation make it easy. If it doesn't, it's because data rules or national interests get in the way. Look for phrases like interlinking, live corridor, or instant cross-border. When you see those, it means money is crossing new digital borders. The third scenario is stress as a catalyst. In simple terms, something breaks, maybe a funding squeeze or a liquidity shock. Short-term borrowing costs spike, and suddenly everyone looks for faster, cheaper settlement options. In times of stress, speed becomes survival. If this scenario happens, it's because instant payments help companies move cash quicker and avoid losses. If it doesn't, central banks might calm things temporarily. Watch for sudden jumps in funding costs, wider credit spreads, or increased margin calls. Those are the early signs of stress pushing innovation forward. The fourth scenario is corporate stable bridges. Think of stable coins, but designed for companies instead of traders. Fully backed by reserves, integrated with traditional banking, and used for cross-border payments. If this takes off, it's because businesses trust it. The rules are clear and reserves are transparent. If it doesn't, regulation stays messy or competitors move faster. You'll see this one through terms like treasury integration, enterprise settlement, or reserve report updated. Each phrase means old and new finance are quietly starting to work together. The fifth scenario is XRP's small operational pockets. This doesn't mean global domination overnight. It means small, real-world tests, maybe a few corridors, limited hours, or smaller balances, using XRP or similar assets to reduce pre-funding costs. If it works, costs drop and transactions speed up. If it doesn't, order books stay too thin or compliance says no. To spot it, watch for pilot corridor, limited production window, or custody integration. Those signals mean testing is happening, not rumors. The sixth scenario is the regulatory breakthrough. This one might be the most important. A few big regions finally define how digital assets fit inside their legal payment systems. When that clarity arrives, risk committees start approving what they once rejected. If it fails, it's because politics or bureaucracy slow it down. Look for words like sandbox to production, passporting, recognition, or no action letter. Each one is a sign that regulators are moving from theory to permission. And finally, the seventh scenario, hybrid flows become normal. This is where everything comes together. Instead of one system dominating, different networks work side by side. Maybe a transaction starts in fiat, moves through a stablecoin bridge, and settles on an instant network. The best combination of cost and speed wins. It fails only if integration becomes too complex or companies prefer closed systems. You'll know it's happening when you hear interoperability, multi-rail routing, or orchestrator. Those words mean the walls are coming down. Now step back. These 7 scenarios don't tell you which direction prices will go. They tell you how fast and how deep those moves could be. Thin liquidity makes small news look huge. Thick liquidity absorbs big events easily. That's why, whenever you hear breaking news or wild predictions, you should always ask, how deep is the surface? Let's make it practical. Here's a quick test you can use for any rumor or leak online. Ask 5 questions. Does the official document include a date and a status? If it's called a pilot, does it define limits or timeline? If it says production, does it mention capacity or transaction windows? If it says interlinking, does it explain technical compatibility? And are reserve or transparency reports updated and time-stamped? If all 5 are yes, that's not hype. That's a real system change. Now, a simple weekly routine to track real progress. 5 minutes, once a week. Check short-term funding. Did it spike suddenly? Check market depth. Is the order book getting thinner? Check volatility and credit spreads, and are both rising? Check money flow. Are ETFs and big funds showing inflows or outflows? And check crypto signals, exchange reserves, futures versus spot, and open interest. If 2 or more of these look weak, liquidity might be drying up. That's it. 5 minutes, and the power comes from repetition. Next week, you'll notice small changes. After 2 weeks, you'll start seeing patterns. After 3, you'll begin to understand the rhythm of liquidity itself. Now, let's address the skeptics. People say, the whole world won't change overnight. True. It happens step by step. They say, institutions don't take risks. Also true. But they move fast when the math makes sense. Others say, liquidity doesn't matter. It does. When liquidity is thin, small news shakes markets. When it's deep, the same news barely moves anything. It's not about guessing. It's about reading the flow. So here's what you have now. 7 possible futures, each one logical and testable. You know what could trigger them, what could block them, and what exact signs confirm they're happening. You also have a simple checklist to separate fact from noise. So next time someone says, This coin will explode next month? Ask them, what signals did you see? If they can't answer, they're just guessing. Let's close with the big idea. Markets don't move because of hope. They move because of flow. Liquidity doesn't decide direction, but it controls speed and size. Infrastructure builds the roads for that flow. When the road is wide, money moves smoothly. When it's narrow, everything clogs. Your job isn't to predict the road ahead. It's to read the signs that are already there. If this helped you see the system more clearly, hit like, subscribe, and comment the word scenario. I'll pin a one-page template so you can track these signals yourself. And in the next video, we'll fill that template with real data to see which scenario is actually starting to form. No hype, no guessing. Just real signals.